Hey traders, this is Ron Haight. Hope you guys are having a fantastic weekend. As always, everything in these videos is for educational purposes only. All right, let's kick off here with the spiders. This is a daily chart of the S&P 500 ETF, SPY. And if I go ahead and zoom in, what we can see here is this is the flagpole, and this is what they call the flag. We are below the 20-day EMA in red and the 50-day SMA in orange, the big institutional moving average. We need to get back above both, just like I've been saying in the nightly videos, and that becomes the target. Otherwise, we get down below this 8250 area where it seems the market keeps stopping, and the target is down here. Now, what I want to do is compare weeklies and dailies. So daily on the S&P, definitely bearish, plus we have a 20-day EMA in red crossing down through the 50-day. That's another mini sell signal. Let's go 2 years. Let's do weekly. Now each candle represents 1 week. The 20 period, move the mouse off the side here, you can see it over on the left, 289.12. 289.12 is the last. Well, we closed the week at 288.85. We're about 27 cents below the red line. That is a breach. Now, it's not a huge one. It is a breach. We do have these almost like tweezer type bottom, but we're near the top of a pattern, not the bottom, so that would not qualify as true tweezer candlestick pattern. But it's just showing probes. We went down, rallied, went down, rallied. So the bulls are sort of clinging, but they're starting to lose their edge. The key metric on the weekly charts, which is what we're looking at right now, for me, is this 50 period moving average on the weeklies, just like it is on the dailies. We could not close below it back at the end of May, right before Memorial Day. Let's see what happens if we get down there. If we close below it, and then we take out the May low, holy mackerel, this is the target, even on the weeklies. Otherwise, if we get back above the red, we go back up here as a target. So again, if I could show you the dailies, sort of similar situation. We break these lows, we come down here. We get back above both moving averages, we come back up here. And that's the theme I've been showing you guys. So again, daily on spiders is bearish. The weeklies are starting to fall. So the bears are getting a little more edge here as time goes by. Now here is the Dow Jones ETF, the DIA. Below the red line, below the orange. Target remains down here if we take out these lows in here. So I would consider using the low from Wednesday, not the low, but the closing low, 254.41. I could put an alert at 254. We close below there, this becomes the target. Otherwise, get back above moving averages, up there's the target. If I show you Dow on a weekly basis, just really quickly, again, tweezer type pattern, but we're up near highs, not lows, so that is not a true tweezer candlestick pattern. We are closing below the 20 period cleanly. So now you could say the daily charts are going very cautionary, very middle of the road at this point. We get below the orange, that's bearish. Then you go back to the June lows, which was like just on the daily chart, the end of May, beginning of June, and then it comes back down here. If I show you the Qs on a weekly, the Qs are still hanging above their 20 period moving average. So of the three on the weeklies, Qs look the best. Again, below the 50 period on the weeklies also ties in with this low here. We break the 50, we break this low, and then we go back down here as a target. Otherwise, 195-ish is still a target. If I go 1 year daily on the Qs, still a bear flag, just like the Dow, just like the S&P on their daily charts. Flag, pole, and flag. You got to get back above both the 20-day and the 50-day. Then we go back up here. Otherwise, watch the lows from 8.5. The closing low was 180.73. Then we come down here. You get the picture. And then if I take a look at $VIX, it's also come way off its highs, but it hasn't really busted to the downside hard. It's still up at 18.47%. That's a lot. Or I should say a lot. It's high, given where we usually have been trading in the 12s and 13s, sometimes below there when the market is running bullish. All in all, caution is definitely warranted. Overall, bears have the edge here on the daily charts, and the weeklies are starting to turn, so just be careful out there. Typically, if my stock's below moving averages, I like to consider collar trades if I own stock, maybe protect put options, something. Anything I want to trade bullish, man, that chart's got to look really good. It's got to have maybe positive seasonality with some good volume. Right now, it's again, just more cautious. All right. Sort of how Apple goes the market. You hear that quite a bit, and it's true. It's one of the most heavily owned stocks out there in terms of hedge funds. We broke the 50-day here, then we got right back above it, and it's starting to push higher. Right now, the target would be back up there towards ballpark 215, 220. If it gets back below the 50-day, we will go right to the 8.5 low and then all the way down here. With Apple holding up, it's good news for the market. Nvidia had earnings. They jumped really nicely on Friday, but look how they're caught. If I zoom in here further, it's caught in between the 20-day in red and the 50-day in orange, sort of sandwiched right in there. It's funny how that works. If we get above it, we go back up here to these swing highs, upper 170s. If we can't get above these moving averages, then the target would come back down to the gap fill. So we'll keep an eye on Nvidia right now. It's basically in limbo land. How about retailers? Man, they are taking it. Let me just show you Macy's. They are taking it in the you know what. If I zoom in here, I mean, this stock was at 37 a year ago. Now we're at 16. If I keep zooming in, earnings gap down and we just keep pushing lower. This is bad, bad news. If I bring in all the data on Macy's, we've taken out a monthly swing low. Now we're still in August. We haven't closed there. But if we do, next support level is $5. I'm not saying it's going to get there, but, you know, it's only at $615.98 now. It certainly is getting cheaper by the day, by the week. How about Nordstrom's? With Macy's down, it said Nordstrom's dropping. Again, if I show you all the data on Nordstrom's, multi-year lows, there's a little bit of a swing here around 22, 10% lower, and then back down here. If I show you Abercrombie, this is a monthly chart just to show you how rough it's been. Monthly, the support, there's a little support around 15, but not much. The next target's 10. If I go to a one-year daily chart of Abercrombie, it's right there at that 15 area. 15 is going to be a big deal. November, a year ago, and then back over here in the early part of the summer in June. And then if you look at XRT, which is the retail ETF, it's been taken out behind the woodshed too. No surprise. Lower lows, lower highs. It just keeps coming. If it breaks this low at 38, if I show all the data on XRT, look how important 3750 is. Now, different ETFs, or not ETFs, stocks, can come in and go out of XRT. So it's not exactly a great measure of exact same stocks throughout history, because some were publicly traded before, then late, you know, didn't come around till later. You get the idea, but it's still an ETF of the retail industry. This is huge. Below 3750 or so, below 37, there's nothing till you get all the way down here in the 20s. Again, the same stocks that were in it here aren't necessarily in it here, but it just shows you the magnitude of how retail is really getting crushed. With us getting into back to school season, holiday season, I'm going to look for a turn in the retailers, and if I see it, I will highlight it for you guys. Now, how about Target versus Walmart? Here's Target. Broke support around 86, comes down, comes right back up and hits it, and then we push lower. This could still be considered a bit of a bear flag. Target would not only need to get above the 20-day in red, the 50-day in orange, it needs to go out to new highs, because from here to here is only like $2. That's not exactly a good reward to risk if you want to be a bull. So it really needs to break out above 89 for this chart to truly look attractive from a bullish standpoint. Bearish, other below 81, down to where the gap up was at 77, and then a gap fill at 72. Yikes. So Target's not looking so good. Walmart, on the other hand, it's looking pretty good. We also sold off like Target, earnings, it gaps up, and a black candle. All that means is, and I get asked this a lot, we opened higher than the previous day and closed lower than where we opened, but still higher than the previous day. So bottom line, black candles, we opened up, closed lower, but still closed higher than the previous day, and that's where the black comes from. So open is top left of that candle, closed is bottom right. Is black an ominous thing? No, not at all. We still finished up. It's just showing you it was off the highs. It's also off the lows. A lot of back and forth, which is not to be unexpected because this is all overhead supply now. We break through this around 115. That is bullish for Walmart. So put alerts 115 if you want to keep an eye on that one. How about stamps, STMP? They stopped their deal with the Postal Service, and that led to just an epic. It already had a huge epic fall from 200, then down to 100. Then it had earnings from 70s all the way down here. Shows you the value of protective puts. Oh my God! Without those, I don't even want to know what folks' portfolios might look like. But look what's happening now. Go ahead and zoom in. Gap up, consolidation, and a push higher on a pickup in volume. Believe it or not, the close was 83.39. Right there. 83.39 on May 8th. That's the target. It's almost 50% higher. It's insane. I'm not saying it's going to get there. That's the technical target. There's a huge gap, an air gap between where we are now and the next resistance level. And here is PANW, otherwise known as Palo Alto Networks. Really bad day on Friday. Watch 195. We almost got down to it on Friday. We break 195. Then you start coming down towards 170 or the 165 area. All right, so some stocks to watch, bullish, bearish, some in trouble, some looking good, some holding up, some not. Like I said, caution is the name of the game for this week. Bears still have the edge on the daily charts, and the weeklies are starting to get broken. Wish you guys all the very best. I'm back with you in tomorrow's video. Take good care.